Ladies and gentlemen of the crypto space, we're live on a Friday, February 13th at 11:30 a.m. You know what we do here. I'm not here to tell you when bottom is. That's what X is for. And that's what pontificators and prognosticators and prophetic people are for. People that like to guess. They like to speculate. I don't give a shit about where bottom is. I give a shit about understanding the way the system works such that my comprehensive understanding of things gives me calm and comfort and a capacity to explain why and how things work the way they work. When I could explain why and how things work the way they work, I could have a conversation with other people. I could talk to friends and family. I could sit in a sauna and talk with someone and not sound like a fucking idiot that I own cryptocurrencies that look like shit, that have lost value. Oh, eventually they're going to be okay. When you understand the way the system works, you have time frames in mind. You could explain roughly when things should look better based on the mechanics of how the system operates. And that is where my mind has been at for a long time. There is every ounce of calm and comfort in the way I talk with you guys, because there's every ounce of calm and comfort the way I talk to everybody, because of the things I've learned over the past years. So let's go through, first and foremost, where we are. We'll go through some of the X posts that I've retweeted over the last couple of days, really yesterday. And Donnie came out from left field with a few posts. So I saw this post first and foremost about capitulation. It's folks that sell things because they fear other people are going to sell them too. And they're like, oh, price depreciation and total net worth is getting hammered and I'm losing money. Money. What is money? What is total net worth? What is the significance of all this? And I'm in favor of contrarian methodology. My four rules don't have a component of net worth in there, do they? But I do have an expectation that my four rules will lead to increasing net worth over time. So even though I don't discuss nor really pay much interest to the concept of net worth, in the back of my mind, from a normie perspective, yeah, I can appreciate the emotional frustration and difficulties associated with thinking in terms of net worth, but that's not what's first and foremost on my mind. The rules are, but the rules indirectly lead to increasing net worth over time. So as folks capitulate and are selling their assets, what will happen is there'll be people that don't own assets because that is exactly what the system does to people. It causes them to own less and less assets over time. Thus, why I came up with the rule. Rule number one, own more assets. Why? Because the rich people own the assets. Because the rich people aren't sitting around thinking about their net worth. Now, maybe some of them are, and then they're the big gamblers that throw on the 100x leverage and they blow up their $20 billion fortune. Those are a bunch of assholes. But the real wealthy people don't give a shit about their net worth. And they don't even really think about the rules. They don't even think about owning more assets over time. They just inherently do it. They get cash. Well, they buy things, they own things, they get another shopping center, they get another business, an entrepreneurial idea, because that makes sense. That is what you do when you play by not normie rules. And you really have to have a contrarian mindset. Now, I speak to a couple of folks that may or may not actually listen to me from time to time. And I value those conversations greatly because they really adhere to the four rules without ever having heard the four rules, which is a very interesting conversation. So It's kind of validation of the four rules. When you have a conversation with someone that's been living like that for 20, 30 years, and then you hear their stories and you're like, oh, yeah, my rules are good. And my rules are consistent with the way wealthier folks live. Now, I'm not in that camp yet necessarily, a wealthy person. And wealth is always relative. I do well, not overwhelmingly wealthy, but I think my four rules will lead more people and hopefully myself to increasing wealth in the future. All right, so that was this post down here. As folks capitulate, the majority will own less and less and less assets. And that is just the way it is. Donnie came out from left field with the DXY post. Nobody looks at the DXY from a 6 month perspective. Nobody. And that is the perspective that matters because that's the mechanics of the system and that's how the system works. Dollar down increases foreign currency value. There's much more foreign currency on the planet. Therefore, that much more currency that's increasingly valuable is able to buy more assets, which drives up prices much more than dollars can because there's much more foreign currency. It just makes mechanical sense. So read Donnie's post. You go through my post history, find this post, and I agree with Donnie. Donnie agrees with me. We agree with each other. We're on the verge. In fact, I think can I see my likes? Oh, yep, I can see my likes. Is it a reply? No, I don't know where it is. But there was a post earlier that was, we're on the verge of a dollar breakdown. It was basically a chart like this that was looking at what, the trend. So there's your breakdown. So it's a break of trend. Okay. Folks need to understand what this was back in May of 2021. Folks need to understand what was going on back in 11. And really, the period of 2008 to 2011 was a bottoming pattern for the dollar. And it was a bull market ever since. So, fun fact, highlighter. If this was your crypto bull market from 2016 to 2017, and this was your crypto bull market from 2020 to 2021, neither of them were below, well, actually, in 2020 and 21, he kind of created the trend line, but neither of them were below this trend line. 2021 created the trend. So, but the point is, we're below that trend now. I don't like trend lines. I guess more or better said, from a moving average standpoint, look, the interaction with the 200 SMA was the bottom in 2016, 2017. And the breach of the 100 SMA was the bottom in 2020, 2021 cycles. As of right now, we're finally below the 100 SMA on the monthly. We're talking about the monthly chart here, guys. This is a chart that takes time to execute. This is a chart that isn't day to day looking at X. This is a chart that is something of patience. This is like look back at your metrics or your change in physique over a month from a health perspective, over 2 months, and you check your change over 3 months or 6 months. This is a long duration perspective here. So you're finally underneath the 100 SMA for the first time in how long? How long, ladies and gentlemen, have you been waiting? You've been waiting 1,095 days. Okay? That's how long it's even more. It's even more because you're really going from a breach of the 100 SMA to finally getting back below it, which is 1,338 days it took to breach the 100 SMA to the upside and finally come back down. So, folks, always put this market in this 4-year cycle thing, this box. Now, have a conversation about that box. There's some validity to that conversation. And clearly, we're having technicals that are very comparable to 2022. And I can show you that in Bitcoin. We've discussed that, especially last week. But the reality is, it has taken years for the dollar to get back to levels that are more consistent with bullish crypto market conditions, which is outside the scope of this 4-year box that this whole damn crypto space loves to place everything in. Everything doesn't fit into a nicely packaged box. That's not the way it works. Every 4 years, Bitcoin goes up. Every 4 years, Bitcoin comes down, and there's a bear market, a bull market, and a bear market. Get in for the bull market, get out for the bear market. The fuck? What is this cookie cutter shit? Oh, gotta buy low, gotta sell high. It's not the way capital management works. It's the way it works for traders, but that's not the way monetary systems work. And crypto is a monetary system. So the way things work is there's a status, there's a situation going on. And that situation going on is relative to the situation that has occurred for a past period of time. And that situation that has occurred for a relative past period of time is in the context of previous structures and cycles that you're trying to understand. And predominantly, you're trying to understand what the hell occurred in 16, 17, 20, and 21, because those were your bull markets that everyone wants to be in and that we haven't been in. Because if we were in it, a bull market post 2021 isn't a bull market. It's a very different market because the next, whatever you want to call it, cycle is going to be very different than what occurred in the last cycle. Because now you have to understand what occurred in the last cycle. What occurred? Oh, tokens and ticker symbols and prices go up and people made and lost money. No, that's not what occurred in the last cycle. All right, 5-second digression of what occurred in the last cycle. What occurred in the last cycle in 2020 and 21 was the emergence of an emerging market, of an actual economy, because that's what exists when you have currency supply. Okay? So there's currency supply, and there's credit, and there's monetary velocity, and there's lending. And now there's an entire government on the planet Earth that is quite favorable of this market becoming a global market. It happens to be the United States government. So, I mean, for all practical purposes, for the best thing I could possibly say without rehashing all the shit I talk about over and over again is that these are the most remarkable market conditions I've ever seen. The setup is extraordinary from the administration to what is painstakingly going through Congress. Horribly slow, those assholes, but it'll get done. The setup from the administration to Congress to the banks to the monetary, the fintech that has been created in the context of how global currency systems work is mind boggling to process. Because we've talked about what a eurodollar market is, right? Everyone here knows what the eurodollar market is, and clearly we see that the eurodollar market exists in the crypto space now. And isn't that the most incredible, insane thing from a scale and scope perspective? Am I right? Don't you all agree with that? So the next cycle post 2021, where all these technologies were born in bullish market conditions, the recognition of a eurodollar market in these crypto markets, which are accessible to all countries, but of no country, could potentially be larger in scale and scope to anything that he could imagine from a traditional financial perspective. I mean, the banks in Europe handle credit and lending in Europe, and obviously international clientele as well. So it's not completely isolated. But the point is, Aave handles credit to everywhere, the whole frickin' planet. Llamaland and Curveland handle credit to the whole planet. And there's others, FFX, Liquidity. There's few survivors. These Eurodollar businesses handle credit to the entire planet. So it's like a bank that's accessible to the entire planet. So that's why the administrations and all the administrations around the world have flipped so quickly, because all of them understand that at some point the system needs to expand. And you don't just expand the system. There's no fucking money printer that everyone magically thinks exists. Money printing is a manifestation of credit, which is a manifestation of business cycle that Raul talks about. But for that money printer to turn on, there has to be a place to spend the money. Do you think the politicians want the money spent in real estate? You'll have riots by the millennials. You'll have an absolute meltdown because affordability will not just disintegrate further, it will evaporate entirely, and you'll have an entire generation that will never, ever, ever, ever they already never could, they barely could ever own anything right now. Isn't that the popular headline? So you think the politicians, when the money printer turns on, want that capital to go to real estate? You think the politicians want the currency expansion to go to the stock market because everyone thinks the rich own the stock market and all it does is go up in price, and the rich get richer and the poor own no fucking assets because they sell everything and they capitulate and they don't follow rule number one, because that's exactly what the data says. They sell everything. Everyone sells all their shit at the worst possible time, and they don't own assets. So where do the politicians want the money to go? They have to find the place for it to go, and that's kind of what I've been arguing. I replied to Joseph Brown, who's pretty cool. He does good social media. Very few people. I don't listen to many people. He's decent content. So this is a perfect example of the money printer that everyone thinks is magical, and they print money because they just want to. No, they print money because they have to. They spend money because they literally spend money because they have to. It's literally the treasury is in charge, and the treasury is producing these products in a supply and demand fashion. And treasury comes up with this cash, and basically Congress is like, "Oh shit, we got a whole boatload of cash that we got to spend." It's the literally my opinion is the exact opposite of what every asshole out there thinks is going on. Everyone thinks that the problem is spending. I mean, yeah, you can say it is, but they're not spending because they're saying they want to spend more and more and more. They're literally spending because they have a bank account that is filling up faster than they could spend it, because Treasury has to print those treasuries to meet the demand of the market. This is a very interesting conclusion. So Treasury has to sell their treasuries, otherwise interest rates come down. What happens if interest rates come down? Not the stupid Fed funds rate, the Federal Reserve's interest rate that everyone looks at. No, I'm talking about interest rates, 10-year, 20-year, long-term interest rates which govern lending and credit from the banks, basically worldwide. If interest rates come down, credit goes up. If credit goes up, um, That's exactly where consumer price inflation comes from. That's exactly where real estate inflation comes from. Because the interest rates on the mortgages come down, and there goes the housing market. So if Treasury doesn't sell enough treasuries, that means there's more buyers than supply, and the interest rates come down. And therefore credit consumption goes up. And there goes the consumer price inflation that everyone rightfully, but for the wrong reason, blames Congress for. Isn't that an interesting contrarian take? It's the exact opposite of what everyone thinks. Treasury's raising all this money not because they necessarily want to, because if the Treasury didn't sell all these treasuries, interest rates would come down. We know that because the chart literally says it. This is the actual chart. Here's the 10-year yield. 10-year yields are horizontal, completely horizontal. They haven't budged for 1,189 days. Treasury has literally matched supply and demand. They've literally, the market said we want this many treasuries, and Treasury literally created exactly what the market wanted. Because if interest rates came down, credit would explode, and there goes the consumer price inflation that the Federal Reserve gets all pissy about, and the general public literally loses their mind over, rightfully so. So, for all practical purposes, Treasury did an excellent job over the last 1,189 days because they have controlled consumer price inflation. It's not the Federal Reserve and their interest rate. That doesn't do what people think it does. You want the interest rate on lending, not bank lending to one another, intra-bank lending. You're talking about lending to the general public, mortgages, home equity lines of credit, small business loans. That's what drive general public consumption of new currency. And that's governed by basically the benchmark interest rate, which is 10-year yields, which is literally what you're looking at right here. So Treasury did a damn good job at controlling consumer price inflation over the last 1,189 days. Not the Federal Reserve. Oh, it's not the Federal Reserve that controlled the consumer price inflation. It's the damn Treasury by matching supply with demand. Contrarian take, hot contrarian take of the day. Okay, so let's move on. Anything else interesting? That was the hot contrarian. Oh, this is a cute one. Sakatsu came out with the central bank balance sheet dollar denominated. I pulled it out to the monthly, and it turns out it never broke the 100 SMA. Um, so I have the chart here. Bip, bip. I mean, this is the largest contraction in central bank balance sheets this century. Okay, so for the entire post 2000, and we don't have data prior, at least on these spreads. Um, you never came close to the 100 SMA. But you had a mean regression to basically the 50 SMA back in March of 2020. Oh, I mean, you can't make this shit up. You know, the popular narrative is just such, it's literally like the hot take. It's like tabloid news. Oh, everything crashed because of COVID. No, everything crashed because central banks, with the liquidity, what they owned, and their capacity to contribute to the asset prices of what they own, diminished. They contracted the central bank balance sheets around the world, and the peak was March of 2020. You can't make this shit up. It's all right here in the data, ladies and gentlemen. And all you have to do is tell a story that's different than what you would hear on fucking Fox and Friends and CNN. Something that actually makes sense rather than, oh, they shut down the economy, so everything fell apart. No, it's more than that. And it all comes down to plumbing. It all comes down to the way currency systems work. So all you got to do is understand a little bit of the mechanics of the way things work. And you're like, oh shit, there's actually a better story. There's a more robust, a more rational, a more interesting story based on the way things actually work rather than, oh, everyone got scared and sold everything. Better story out there, ladies and gentlemen. So you have just lived through a mean regression in central banks contributing contribution to liquidity than 2020. This is as tight as it's been. This is the biggest contraction it's been in since prior to 2000, this century. Which leads me to the same exact conclusion I come to time and time again. The next, whatever the hell you want to call it, cycle in crypto isn't going to be a cycle. It's going to be a full on inflation of the crypto market to the scale and scope of real estate and equity markets. It's to be inflated. It's to be inflated to a global scale and scope market. And then you're like, why? Why? Why would they? Because they need to spend the money. They need to create the money. Because the central banks need to meet supply and demand. Because the central banks need to increase money supply to stoke economic activity in order to get the tax receipts, in order to basically do exactly the same thing over again. It's literally a self fulfilling prophecy. They create the money because the market demands it, and that creates the tax receipts, which allow them to create the money or pay the interest on the debt, which is basically allow them to create the money. Can't make this shit up. It's a pretty cool story. Bitcoin 69K, curve back at 25 cents. Good to see 17.9 cents on yield basis. This is a cute chart. Others, this is a cute chart. You know why this is a cute chart? There's others in Bitcoin denominated. This chart tells you that when non-Bitcoin hits, and others is non-Bitcoin nor Ethereum, and obviously that's Bitcoin denominated. But the point is, this chart tells you when non-Bitcoin nor Ethereum hits, the price goes up so extremely quick, it melts faces. So everything that was taken away gets given back in such a remarkably fast amount of time. So what took from 2018, bear market 2018, to August of 19, this chart actually is great because I remember 2018 to 2000, August 2019 very clearly. It was given back in a matter of probably it's almost a V shape. It is a V shape recovery. It's given it back in the amount of time that it took to be taken away. But that's not what occurred here necessarily. We could easily see this is a 1 year period, trough to peak, January 21 to January 22. It's a 1 year trough to peak. We could see like a 1 year trough to peak, and we could get back to a high like that. So, but this was a much longer duration drawdown in the altcoin market. Altcoin, hate that goddamn phrase. This is a very long period of time, ladies and gentlemen. Talking about January 22 to now is 1,492 days. 1,492 days. Back in the previous drawdown of the non Bitcoin, non Ethereum space, it's 457 days, peak to trough. So everyone's like, oh, 4 year cycles. Meanwhile, the drawdown in altcoins between end of 16, 17 cycle, which is 18 and 19, was 457 days. It's right there in the chart. Versus now, which has been going on for 1,492 days. So what is going on now is not like what occurred in the most previous quote unquote cycle. It's different this time. When this finally breaks, it goes up at a speed. that you'll not folks cannot respond to at all. Very exciting, to say the least. Um, okay, there's your technical outlook. Interest rates we talked about. 10-year yields move is at 68. It's up 11%. So there's volatility in the market, and it's just going to take time for things to calm down. As I said, I started the stream, and I'll end my initial monologues, about 30-minute monologue so far. I'm not here to say bottom. I don't give a shit about bottom. I'm here to know where things are going to be in the next 5 years, and where things will be in the next 5 years, wherever, whenever the market hits, it's going to be a lovely, lovely market. And my expectation is that sooner or later, watch, it aligns with Ben Cohen perfectly, sometime towards the end of the year, August, September, October. Great. So technicals line up with these big, grandiose, large scale macro stories in very unsurprising ways often. Now, that's cool. I prefer to understand the market in terms of these grandiose stories rather than some relatively trivial, a technical perspective. It's relatively trivial. It's much more sophisticated. I don't mean that in a derogatory way to diminish his capacity to tell a story or anyone's technical capacity to tell a story, but I very much prefer to understand and tell the story of the way the system works. I like that. I find it interesting and satisfying to understand how the system works. Do some commentary. Arrow, good morning, my friend. Good morning, Cap. Much a pleasure. Crypto Jade, Cap, I ran analysis on Arrow is trading at a 2x price per share P&E. This is on a TTM, does not include Q4 January 25 when volume was strong. Well, a two times price per share. I mean, what do tech stocks run at? Oh dear. Yeah, seems crazy cheap. Everything's cheap. It's been destroyed. The whole market's been destroyed, and you know that by this chart. You spent the last 1,492 days of everything getting hammered in price as low as it can go. Can it go lower? Sure. But at some point, it stops going lower and it starts going higher. And I don't give a shit about total net worth. All I know is the particular assets I want to own. And if you have capital, you own more assets. If you don't have capital, you don't own more assets. That's okay. That's rule number two. You don't have to keep buying assets every time the damn price goes down. All you need to do is make sure that you have some assets. Because if you have assets, you're better than an asshole that doesn't have anything because they sold everything because they're so afraid to own assets. That's the truth, ladies and gentlemen. Be better than the asshole that sold everything because they were too afraid to own assets. That's all you need to do to be successful over time. IF, morning, picked up a lot of YB. It's 138% right now. It's nice numbers on yield basis. I hope the business is a barn burner in the future. I look forward to a lot of the governance. I look forward to a lot of things stabilizing. I expect everything to stabilize in Curve Federation and yield basis on top of that. How it factors in is something that is overwhelmingly synergistic, in my opinion, and makes perfect sense to me. I look forward to everything that comes from that dynamic duo as well. Thank you very much, IF. I'm trying my best. I'm not where I want to be, but that's always a work in progress, right? Been absent for a few weeks. Dean is back in the house. Much a pleasure. Hope everything's well, dude. Peter, good morning. Much a pleasure. Samit, Cap looking rip. Um, not, as I said, not entirely where I want to be, but it's always a work in progress. Yeah, still nothing to do. Watching PA would make you crazy. It's done nothing over the months. Yeah, that's okay. It's not isn't the goal, and this is the goal I set out for in 2022. I don't want anything to do in a raging bull market. In a raging bull market, I want to be clicking and getting claim. And I want to sit on a pile of cash and have a choice. Do I invest? Do I save? Do I have cash? It's a period of prosperity. When you have a period of prosperity, you have choices because you have extra cash, which is so much better than a period of austerity, which we've had for the last 1,492 days. So there's nothing to do. And if you've done things right, there will be very little to do in a raging bull market also. Isn't that the most interesting reality? Lean and mean cap, appreciate you. Kate Pusher, a fitted optimistic captain is dangerous. Yeah, I'm more optimistic than ever. Things are heading in the right direction. Everything is lined up. It's just when the mechanics of the system are presented and laid out in the way I do it, it's just very clear and obvious and comforting. Nothing to be fearful of. But interestingly enough, look how many folks are on stream. There's about 41 people on stream. Um, Everyone's out there is pissing their pants. Everyone out there has sold their assets. They own nothing. When the market flips and turns green, they're going to panic and buy zero at $2.58 and watch it crash to, what was it, like a buck 90 this morning? Oh, zero is going to change. It is going to change everything. I know all about layer zero. I talk about layer zero all the time. It's the biggest thing since sliced bread. It's going to change everything. Some schmuck out there bought it at 250 and then panic sold it at a buck 90. I'm just saying. I don't know where that came from. I take it a little personal how bad people are at capital management. But it's such a light stream. So few people have the benefit of uh, of our higher level perspectives that most people are destined to fuck it all up. Peter, all the negative sentiment online news is what makes me bullish. ISM movement north of 50. Yeah, that's a factor. I like Raul's content. Folks are so critical of him. And obviously, I don't focus on the way he describes it, but the way he describes things are a component of the way I understand things. I just choose to take what he discusses and put it into a higher level perspective. He focuses on these exponential trends and ISM, which is a nice component to consider, component of the economic situation. But I like to talk about the way money works and the structures of the system and how who prints, who's the printer, who's the money printer. Isn't that the most interesting thing? Every asshole out there thinks, "Ooh, the Federal Reserve is the money printer go burr," and the real problem is Congress who spends the money. Meanwhile, the reality is the money printer is us, the people, vis-a-vis the banking system and credit, and 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 the money and it's not Congress who's necessarily the asshole. It's Treasury who's forced to make the money in order to meet their supply and demand balance. And they're dumping all this money into Congress, and Congress was like, "Oh shit, I got another trillion I got to spend." So that ends up with a bunch of more assholes getting free money out of Congress. So that just makes a mess out of things because they don't know what to spend the money on. There's just a bunch of idiots in Congress. Anyway, so it's just the exact opposite of what everyone thinks. It really is. To me, it's emissions. Sometimes I think that curve supply was a lot more tight in the early days, maybe supporting 432 level. Now most of the supply is a market. Will that have to be absorbed? It's not most of the supply, but supply is significantly different than what it was. It's a much more mature protocol. Now is the worst time to inspect anything that's going on. Right now, market conditions dominate, and no matter what the supply and demand balance is, everything is under pressure until there's a surplus of capital and not an exuberance for buy pressure, but at least a significant demand for buy pressure, appreciating the fintech businesses and the offerings from what consumers are actually going to use these products for. So we're not in good market conditions to really assess uh, how well things need to be absorbed right now. The point is, in bullish market conditions, the supply that curve creates um, is going to be absorbed. It is significantly less than what it was. Its disinflationary emission schedule has significantly disinflated. It's a completely different state now compared to what it was a year, 2, 3 years ago. So that's just a reality that so many folks need to digest. When you're, a lot of folks are very uncomfortable with certain protocols right now. Um, but now is not the time to necessarily be excessively critical of where protocols are because the market is not appreciating them. The market is hammering them. Its market is beating a dead horse at this point. I mean, look at this thing. The market is literally beating a dead horse at this point, 1,492 days. At some point, this needs to bottom because this has been bottoming since June of 2025. It's higher low after higher low since June of 2025, and we're in February of 26. So we're getting there, folks. We're getting there. It's not for me to tell you to have patience. It's for me to tell you that I have infinite patience and know where things will be, and I just let time pass until things get to prosperity versus right now, which is austerity. Hey, pusher, cap streaming in a white beater is the bottom signal. Maybe it is. I give up on t-shirts. I'm not walking today because I did big sauna session this morning, 40 minutes, which puts a lot of strain because gets your heart rate up a lot. When you do past 20 minutes, you really, it's like putting in, especially what I do, because I do a little bit of light cardio in a sauna. I mean, it's literally bullshit. You literally do knee bends and like a torso twist. I mean, just literally any movement at 200 degrees, and you're going to get your heart rate way up. Now, if any of you don't do that, unless you have been training, that is a tremendous amount of energy expenditure and pressure and strain, and you really need to acclimate to things. So don't do what I do. But I sit in a sauna for a solid 30, 40 minutes and often do a little bit of light cardio in a sauna. Um, maybe that's a bottom signal. Maybe it is. Samit, your model of T-bills is A1. Thank you for giving a super well thought out model. Yeah, it's not the typical. Definitely contrarian. Isn't that weird? How everyone tells a story and then I tell a very different story. I like my different story. I like being different. I definitely don't want to be normal. Arrow, you've said before how in 2019 you sold a bunch, all of your IRA for Bitcoin crypto. How is now any different? Uh, for myself, it's different because I have my crypto portfolio relative to whatever's left in my traditional investments. And the traditional investments have done well because of large, decent appreciation in mining and critical materials, gold and precious metals, and partial reallocations to Bitcoin ETFs. So it's different for me because comparing the size of crypto exposure to traditional investments, things are pretty good. So I don't need to adjust, but there is no difference. This is likely a great year for that kind of radical restructuring of a portfolio. If you're all in traditional finance, Fidelity or whatever investment, whatever brokerage firm, uh, this is exactly now a type of condition that I did what I did in 2019 when everyone's pissing themselves. Now, the interesting thing is, I did what I did in 2019 without this robust thesis and this story. It would be so much easier now for me to offload 50% of whatever I have left in traditional equities because of the story. It wasn't a complete leap of faith in 2019. Um, because there was some narrative, there was Bitcoin, and I have history from 16, 17, and earlier. I mean, I remember, what was it, 2017, I had, 13 1080 Ti's in my in my kitchen in Orlando, in an apartment in Orlando. The electric bill was $350 a month for a one-bedroom apartment with those 1080 Ti's, and it's Orlando, so literally the AC cost as much as the power for the GPUs. It's literally heaters in the kitchen. And that's what I was doing back in 2017. I was mining a lot of Digibyte back then. And I was just mining. I didn't know what all this meant. Mining Bitcoin also, Litecoin, Script. Now there's fancy algorithms Digibyte does. Anyway, it's whatever. I'm just reminiscing, a little nostalgia there. But if we're on the precipice of big monetary liquidity expansion, now is literally a condition that's comparable to what I did in 2019. But don't, we all have to live with our choices. That's the most important thing. So that everyone is responsible for their own actions, good or bad. That's always an important thing to remember. A great monologue in this Friday morning cab. Always a pleasure, Peter. Always a pleasure. Yeah, the what if it goes lower fear is real, and it's quite the mental baggage I'm trying to let go. It's good, but when you have something you can't sell, and that's the beauty of the locked positions, I can't do shit. But guess what? They're going to exist. They're going to inflate at some point, and I still think all the lovely price targets, from a technical analysis perspective, from like Credible Crypto and stuff like that, those are cool price targets. Why did they change? Did they change at all? No, I don't think they change at all. So if it goes lower and eventually goes to those price targets anyway, I don't give a shit. None of this matters. That means all of this was noise. And the fact that they're locked positions means we can't do anything about it anyway. And that's exactly what I want. I want to not be able to do anything in bad times and in good times. I want to not be able to do anything. I just want to click claim buttons. And that is what I endeavored to structure in 22. I wanted to remove all the options and the choices to simplify the equation. My man, we've been doing this for quite some time, and we'll be here to see how it plays out. And I think it will be sooner than later. Thoughts on Nirvana? I'm a seed investor in Samsara, one of the few seed investors. I wonder how much liquidity would allocate there, better market conditions. I have a very high opinion of Nirvana and Samsara. It is always a valid statement. Look at the greatest tech. Look at all our investments are shot to shit. So I could say it's great tech. Doesn't necessarily mean it's going to do well in the short term, but I'm a seed investor in Samsara. So the point is, I have a high opinion of what they built from a technology perspective. It's an on-chain, it's an on-chain debt, a treasury, but it's a treasury of treasuries. It's bigger in scale and scope potentially to the Bitcoin ETFs. The potential for Samsara is extraordinary, and that generates revenue for Nirvana. So it's literally a suite of synergistic protocols where Samsara isn't just the protocol, it's an ecosystem. The potential for what comes when Samsara has a list of like 1,000 things in bullish market conditions is extraordinary to potentially even consider. So I have a high opinion of what they built. Peter, rule number one, own more assets is probably the best rule I've ever heard. And it seriously changed the way I view investing and storing value. All you have to do to win against the dollar down is to buy more assets. It's see the dollar. So isn't that the greatest irony? The dollar has been going up since 2008. But that's the general public's perspective. Ooh, dollar down. It's not necessarily dollar down in the way at least the general public describes it, because the general public's always wrong. They don't get it because the dollar's been going up for the last 2000. So it's 20 since 2008 to 22. So that's what is that 12, 14 years. That's 40. So the dollar went up for 14 years, but it's not that. You don't understand what I'm saying. It's not dollar down. So it's not what the general public understand. But yes, but the simplicity of rule number one is what's so consistent with the wealthy people. They're not out there pissing their pants when shit goes down in price. They're thinking in terms of owning more assets over time. The last thing the wealthy do truly is at least the smart wealthy, is panic. I'm adopting your four rules more. It's the guidelines produce simplicity. They give us a framework and they allow us to simplify the equation. I hope it brings you peace of mind. Truly do. Having choices is greater than doing less, making more. I want to do nothing. I don't want to do nothing. I want to be active. I want to go to the gym. I want to be with my family. I want to be with my extended family and do barbecues. I don't want to be thinking about it's the goddamn market in a bull market or a bear market. That's some stupid shit to think about. So that's why the four rules are really all you have to think about. And then in good conditions, you got more cash. Bad conditions, you have less cash. Then apply the four rules. Rinse, repeat over and over again. I've had to learn the hard way over the last 1,000 days, but now I'm Zen like calm. Rule number one is comfort. Ain't that the truth, my friend? Well, we'll continue to have this conversation, and I'm sure we'll continue to have this conversation when we have bullish market conditions. And then we'll get to look back at the bearish market conditions and compare them to the good conditions and be like, oh shit, we've been through a lot. Our stories will evolve over time. Peace, my friend. Have a good one. Sir Joe, President, accounted for. Late but here. Critical Mass. Always a pleasure. Ladies and gentlemen of the crypto space, Friday, February 13th, 12:22 p.m. 45. 45 souls have made it to the end of the stream. We are down from hundreds. We used to have 4, 5, 600 people. Not even all time high. That was like 800, 900. So God bless all of you that have survived, that continue to have a divergent methodology, think a little bit different, dare to be different than the general public who insists on owning absolutely nothing. Is it really as simple as that? Is it really as simple as that? Enjoy your weekend, simplify the equation, get some exercise in, walking, take care of your heart, sit in the sauna. I will see you guys and gals next week. Until then, peace.